Mic, one check. And we good to go. So, how is everyone doing? My name is Offender Dube, currency coach at FX Link, and I'd like to welcome you back to another episode of our Forex Weekend Market Review. So, this past week, I had an analysis on the dollar yen, and we were also looking at a possible short-term opportunity. And as you can see, things didn't quite go my way. Where in this case, I was looking at a possible short-term opportunity somewhere around the kill zone. Stop loss should have been just a few pips above this previous high, and my take profit was supposed to be back at the retest of structure. So this week, as you can see, I started my review a bit different from how I usually would. I just want to get into the meat of things. So let's get to it. So on the dollar yen, let's just take an overall view on things. As you can see, that price action has overall been in an uptrend. From this point, price action has shot up, and until today, we haven't been able to break this recent lows. So I think we could all agree that price action is currently in an overall uptrend. We might have a short-term downtrend at this point, but for now, price action is in an overall uptrend. So price action rallies up, decide to give us a push to the downside. Could be a pullback. For others think that could be a reversal. At this point we weren't quite sure. And price action decided to give us a push back up where it started this significant resistance area. But at this point, very few people were looking at a selling opportunity. Only the smart traders, because as you can see, price action wasn't an overall uptrend. So only the smart traders were involved at this selling opportunity. Most of the traders would have missed this part. The price action pushes to the downside, where we create another support area. Again, very few people were looking to buy. After price action gave us a push, a retracement, a push, some traders were looking for a trend continuation opportunity, expecting price action to be in a downtrend. And price action pushes up to the upside again. Some people were like, oh, the big boy is back, the overall uptrend is back. So very few traders again were looking for a short-term opportunity. So they missed this part, missed this buy, missed this price action really lower. Some of the more, I think, average traders were waiting for price action to at least give us a push down here so that they could enter. And as you can see, we didn't quite hit this area, and price action rallied up. So again, most traders missed this part. Finally, price action pushes up, hits this resistance. Now people start looking like, okay, I know I'm not a forex guru, but are we in a consolidation? Now in this way, people start to actually see that price action might be in a possible consolidation. We resisted, had a support. So at this point, we haven't been in the trending market. So a bit skeptical of this area. Some might leave the street, and then price action starts to give us a push back to our support, and they're like, nah, I'm ready for this one. I missed this part, missed this area, I won't miss this one too. And what happens? A bit more conservative at this point. This is where as soon as price action hits this area, possibly they might be waiting for further more confirmation, because they're a bit frightened at this point. Then let's just say some of the traders have a long opportunity where they expect take profit to be back at retest of structure. Now this is the late comers, not really late. Okay, they are quite late, but they managed to get a piece of this and managed to bank in close to 600 pips. And now the really late comers start to come in like, no, not this time. I missed this part, and not mentioning all the other areas I've missed. Certainly not missing this one. And what happens? Similar to what happened over here. Everybody starts putting their limit orders over here. Stop loss, just a few pips above our kill zone, take profit back at retest of structure. And as you can see, at this point, a price action doesn't even hesitate or come near the stop loss, just gives us a bit of a spike and release back down. Now, what do you think is happening in most traders' mind? Think about it. Think about the emotional side of it. At this point, they missed this first few opportunities. Already now they are fighting with the market. There's emotion ingrained. Wherever there's money involved, there's obviously going to be emotions. That's why trading is one of the hardest things to do, because it's hard to put emotions aside where there's money involved. And thinking about it, these people have been missing this opportunity. So there was emotion that I missed this. They're quite angry with the market and started fighting the market. And finally, very not too late, but a bit late in this trade, they start catching this trade. The latecomers. As soon as they catch this market, price action really is up. They catch this area too. Now, what do you think is happening? Overexcitement. This is where they think, nah, I'm in control of the market. I know I missed this past few opportunities, but I cut this one and I cut this one. So I know that definitely as soon as price action heads down to this area, this is where I want to have a buying opportunity. And what do you think happens at this point? As soon as price action just hit this area and price action starts to really down, what do you think is happening to the 95% of traders? Definitely this is where they only have the buy limits. At this point, there's already emotion ingrained in this level. For this past few months, price action didn't even go down. It just hit and rallied away. So at this point, they wouldn't really wait for any more confirmations. All they would do is put their pending orders. Now this is where the 95% of traders come in. And they can either take profit, greedy as ever, or be back at this retest of structure. So one thing about the forex market is that the market needs money to move. All this you have been hearing, this tiny syndrome about forex makes about 5 trillion a day. Where do you think that money comes from? Money just doesn't just miraculously appear from nowhere and there's just 5 trillion in the market. This money has to come somewhere. And this is the money that comes from the 95% of the traders. This is the money that most people lose. This is the money that circulates that comes from the losers. And while the smart people had a piece of these opportunities, this is where they start running away from the market. And this is where all the latecomers start to come in. And this is where now the market now needs money to move. Already people have been enjoying free money from this market because there's been a clear consolidation. And once there's emotion ingrained at this level, where the 95% of traders are betting their houses on this level, like, I know this level. Market's just going to touch them really up. That's where they put all their money in. And I think you know how the story ends. This is where price action really is down, comes down, and obviously the stop loss would be just a few pips below the lowest low. In this case, this was the lowest low, or just a few pips below this kill zone. And as you can see, the market makers, as some people like to put it, are unforgiving as ever. They push down, collect all the stops, and take everyone out. Now, what do you think is happening at this point? Yeah. Now they start blaming the brokers. They start blaming their cats. Start blaming their, I don't know. They just blame everybody but themselves. And as soon as this happens, look at it. Now the same psychology arises. As soon as price action breaks the significant support level that's been holding throughout the past 6 weeks, as soon as market makes a break below, close below, what are most traders thinking? The breakout traders. This is where they're looking for a trend continuation opportunity, a breakout strategy. They're like, we had a break below, close below. This is where now price action has to continue to the downside. Of course, how do you trade in forex? Past support has to become a future resistant. So what happens at this point? This is where price action really is down, And as soon as they expect price action to really up, this way they expect past support to become a future resistance. And this was something that I was also a victim of. This was also what happened to me. And this is where the 95% of other traders, this way also want to hop in. That's what happens. This way we put money over here. Stop loss, just a few pips below. And a tick profit would have been back at this rate of the structure. And as I said, there's something that I was a victim of. Now think about it. Market makers really done collected these people's money. This is what these people think, this is an overall downtrend. They expect past support to become a future resistance. This way everybody has their limit orders, price action pushed up and collected the stops too. Now this is something I want to talk about today, something called confirmation bias, and it is something to do with the trading strategy. What actually happened? As I kind of took a hit from this pay, I started going back to my notes, started to quite study what actually happened at this point. Because as I take a clear look, this was pointing at overall uptrend. At this point, I should have had a buying opportunity, but I insisted on selling. So what actually happened? So it's something called, which has to do with confirmation bias. Now, confirmation bias could be either good or bad. It depends on how you use it. Now, in the case of my trading strategy, there are certain filters which I look for. I come in the market, I start looking for a double bottom, an ABCD pattern. If you remember from our past video, we looked for an ABCD pattern, we got one. It was a confirmation of which I needed. I look for a bearish divergence, and if you quite remember, where RSI gives a slope to the downside, first action was sloping to the upside. I got a bearish divergence, more confirmation bias. I look for, we added our Fibonacci extension from my X to A, back to A. We got a 618 somewhere in this area. We added our retracement tools. We added all these other tools which I needed, added to my confirmation bias. Now, confirmation bias at this point acted in a bad way because it kind of blinded me to what the market was actually doing. It only made me see what I wanted to see. It was giving me confirmation from what I wanted to see. Didn't actually give me the light of what the market was actually saying. This is one flaw that comes with the trading strategy. If you systematize it too much, you end up missing what the market wants to tell you and end up doing what you want to do, feeling like you're in control of the market overall. The strategy of yours, the holy grail, has been giving you positive expectancy. So I think the lesson to take away from this week is what I like to call confirmation bias in regards to our trading strategy. So this is something I'd advise most people to go through and look at in their trading strategy. Does your trading strategy make you lose sight of what the market is actually saying? Or did you give it room for you not to systematize it too much and to see what the market is actually telling you? Now, we did take a loss from this trade. I'm not hurt, it's part of the game. I understand, but yeah, this is just something I just thought I'd share with you today. I hope you enjoyed this review. And I think the major question now would be, where's the market going? But for all that, you'd have to join me for my Sunday's market preview, and then take a break, refresh, and I'll see you on the second part of our market review. So on this second part of our review, we'll just be trying to add on what we were talking about in the first video, which is confirmation bias, on it being a good thing and a bad thing. So on the pair that my partner was looking at, NCD dollar, the first thing I noticed is that this is a level I was looking at on my high time frame, where in this way we're looking at 82. So in our filters, there's something we wait for. Again, this one confirmation that we expect to see at 82, which we had one in this case. Quite far to where we were looking at, but somewhere around our kill zone. And if I could add a retracement tool from this X to A, you can see that at this point, this is where we had a 786 retracement. Out of this area, this way we had a 786, exactly where price action was currently at. And if you could default it just with structure, just a bit lower with structure, and then you can see that that's the level that we were looking at. So we had our first confirmation and check, two confirmation at that point. We had traded two, this one that we got from a high time frame, and we just got a 786 from this retracement. So this is just all confirmation bias at play. Let's try to remove this. And keep in mind, guys, confirmation bias isn't always a bad thing. Sometimes it's a good thing, but sometimes, hence I said in the first video, if your system is too systematized, then it creates a problem. Because let's try to add an extension for my X to A and then back to A. But we get more confirmation. We get a 1618 extension. Right away we got a 786 or 786 retracement. So this is all confirmation bias adding up. This is building a solid case for entry. And the final thing that we'll wait for, okay, that's final, but another thing we'll always wait for is this, a bullish divergence. Final thing that we always wait for was a double bottom and a higher close. So looking at it, everything we needed we got from the market, or should I say everything we wanted to see the market gave to us. We wanted to see a bullish divergence, we want to get a cluster of extensions, we want to see a high close, and all of that we got to see. But the question is, did we see exactly what the market was trying to say to us, or were we just looking for confirmation bias on what we were expecting the market to do? And as you can see with us, this was a complete setup. This is where we were supposed to have an entry point along an opportunity just above this close. Stop loss was supposed to be just a few pips, 10 to 5 pips below. Okay, and we had the first take profit this area, and the second take profit was up at this point. And let's see how the market played out. Price action kept to the upside, giving us more confirmation or just building more emotion that we might be right. Price action is keeping to the upside, so maybe we got this. And what happened? Price action lit up. Eventually we got stopped out. And not only that, price action continued to rally to the downside, meaning we weren't just early, we were actually wrong. We predicted the whole trend wrong, because for the continuation of the week, price action was already down and approached another level of structure. So both of these trades were quite similar, as the only thing that played against us was confirmation bias. So for this week, one thing I think you guys should do, hence I mentioned in the first video, go through your trading strategies. Try to see if that is your trading strategy neglecting you from seeing what the market is actually telling you. Is it too systematized? Does it have any room for you to be able to adapt to the market quickly? And again, I'm not saying that your system is going to be 100% accurate at other times. At other times, your system is supposed to be wrong. It cannot be 100% accurate. But so yeah, guys. So to sum up my whole review, both of our trades went against us, but it's nothing major. It's just a learning curve. Forex is a non-ending learning curve. Even a trader who has over 20 years in the market, I still believe he still has something to learn from the market. One thing about successful traders is that they're always learning. They're always looking to improve, always looking to be better people or traders. So this week, lesson of the week is confirmation bias. I know I cannot dig deep into it, but this is something for you just to go for yourself, check, hit up Google, go to YouTube, just check on confirmation bias and how it could help or go against you in trading. So that's it for this week, guys. I hope you enjoyed our review. Don't forget to hit the subscribe button below and make sure you hit the thumbs up just to give us feedback. Maybe you hate the video. Even so, hit the what is it? Is it a thumbs down? Yeah, you can give us a thumbs down. You know, if you don't like our content and you feel like it's not worthy, it's fine, man. Just give us a thumbs down. I'll take it. Anyway,